All right, are we recording? Are we live? Hello, hello. Is anyone watching this? Are we in? Okay, I think we are working. We're recording. Hey, everyone, welcome in. Nice to see you all tonight. My name is Andy Zhu, host of Gen Z Rebuilds. I really appreciate you all stopping by. In case you haven't been here before, I talk about real estate, talk about cryptocurrency, talk about the stock market, and all to help push us together towards the future, right? This is about Gen Z rebuilding the world, right? So we can all work together to work on our personal finances, to improve our situations in our lives, right? So I appreciate everyone stopping by. Mendez Martin says, hey, nice to see you. I appreciate you stopping by, my friend. How are you doing tonight? I always like to kick off every stream pretty much talking about with the very basic news of what happened in the stock market today. And so in case you guys didn't see, there was a big, obviously, hearing from Federal Reserve Chair Jerome Powell and Janet Yellen, right? Secretary of Treasury. So these two people together, right, they set essentially a lot of the understanding for the market. I'm Ranasha. Is that Ranashra? Ranash Raf says hi. Mendez Martin, hope you're doing good. I am Mendez. I appreciate you, my friend. I'm doing very well. Sorry, I'm coming on a little bit late today. Very, very busy with work. We're working on purchasing this old hotel and like renovating it into like unique resort property. Anyway, I can't really get into the details because it's secret. But that's why I've been busy doing that. So anyway, Jerome Powell, our old boy Jerome, right? Every time he gets on TV, markets go down. And guess what? He got on TV today, markets went down. And I've been speaking here for a while about the importance of the 10-year treasury yield. The importance of the 10-year treasury yield, right? For us understanding how to invest, for us understanding how the future of the market's going to be doing. Arj Panda 2020, are you guys looking for financial partners? Arj Panda, yes, absolutely. Absolutely. If you want to go, and I'm not trying to plug our, I'm not trying to plug our investment site, right? Looking forward to your wisdom and knowledge, Alondra. Happy spring season. Oh, thank you, user 3309. I don't know what your name is. It just shows up as user 3309, but thank you. We are always looking for partners and capital investment partners. If you want to go to investwithhamilton.com, INVESTWITHHAMILTON, investwithhamilton.com. Our company is called Hamilton Development. It's like Hamilton, like Alexander Hamilton, my name is, that's what it is, right? So if you want to go there, you can submit a form. We'd be happy to talk to you, to work with you, or you can just send me a DM on Instagram, and I'm easy to get through that way. Alondra user 3309. That makes sense. You're in Nashville too? Hell yeah. Good to meet more Nashvillians, Arch Panda. Should you sell Afria Mash? Let's talk about Afria in just a second, Mash. I do want to finish off my overall understanding a market update for everybody today. So the overall market update, right? If you're just getting and trying to follow what's going on, usually, as I've been saying here in the past, for the past couple of weeks, the 10-year treasury yields are very, very important to watch as tech stocks, usually as tech stocks fall, 10-year treasury yields are going up, and as tech stocks rise, 10-year treasury yields are going down. And that's been very true for the past couple of weeks, except for today. Today was a very weird day in the markets, actually. And I'm not exactly sure why, but we had sell-offs in both what is known as cyclical stocks, value stocks, as well as tech stocks, despite the 10-year treasury yield going down. So usually what's been happening is as tech stocks sell off, people buy what are called cyclical stocks, or, stocks that do well when the economy is open again. When the economy is doing well and people have a lot of discretionary spending, a lot of extra income, things like going on vacation, right? And hotels and cruise lines and airlines and all these kind of companies, we're going to be doing better, right? Super White Satan 1, funny name. And you saying talking about investments, tech stocks now. And I do think we're going to have a pretty good opportunity to buy tech stocks here soon. And especially because they have been seeing so much pain. And this is what I've been trying to impress upon people. People ask me all the time, is there a bubble in the market, right? Is there a bubble in the market? Well, yes. The answer is yes. The answer is definitely yes. Things are super inflated. Valuations are super inflated. But the thing is about a bubble is that it doesn't matter if we're in a bubble if it doesn't pop. And the important thing about trying to understand what's going on with the bubble is what reason could cause the bubble to pop. Why would the market pop? And we have to understand a lot of the problem. Yeah, the market is a bubble now, absolutely. But what I'm trying to explain, and this is my perspective, please go listen to as many people as you can to get educated about this. But this is my perspective of that even though it's a bubble, it doesn't really matter because there's essentially nothing else you can do with your money. There's a concept in investing currently called TINA, TINA, which means there is no alternative. This is why stocks and real estate and all these assets, all these equities have been going up. Because if I'm a billionaire Bob, right, and I have a bunch of money and I want to make more money with my bunch of money, I want to keep investing my money. That's usually what billionaire Bob wants. I think this light is continually changing on my face. I'm going to turn it down a little bit. So billionaire Bob is going to try to continue to invest his money, right? What does he look at? He used to buy a lot of bonds, right? He used to buy a lot of bonds back in the day, 40, 50 years ago. Did you guys realize that you used to be able to put your money, Elba Zavala says hello? Hello, Elba Zavala. Nice to see you, my friend. Literally 40 years ago, you used to be able to put your money in the bank account or buy bonds and make like 10 to 15% on your money every year. Like, God, oh my gosh, that's literally free money that they were giving away. You can't do that anymore, right? Bond yields, even though they've spiked very heavily over the last, couple of months, they're still at like 1.7% at the peak for the 10-year treasury yield. And you are still losing money to inflation if you invest in a bond, right? So let's say I'm investing $100 into a bond that pays me 1.7% every year, but inflation goes up by 2% every year. And for this next year, maybe even 2.5%. Even though I'm getting 1.7 return on my money, I'm actually losing money due to inflation, right? I'm actually losing money due to inflation. Isn't that crazy? So billionaire Bob is like, well, even though bond rates are rising, I can't afford to lose money to inflation by investing in bonds. That's why real estate, that's why equities have been going up. So are we in a bubble? Absolutely. But what else are you going to do? Like the big financial players, the guys with all the money, the trillionaires, the billionaires, the Saudi Arabian pension fund, all the guys who use JP Morgan and Goldman Sachs, their wealth advisory funds, these guys have nothing else to do but put their money into stocks and real estate and, potentially cryptocurrency now too, right? And with all that money is why you see these assets continue to go up. But what else are you going to do? And so that's why I think that, and people have been saying, okay, well, some of these tech stocks have been falling, right? But why have tech stocks been falling? Tech stocks have been falling because, as I said before, the 10-year treasury yield is going up. But the 10-year treasury yield is going up only in response to the fact that inflation is going up. So actually inflation in response, so let's put it this way. During the coronavirus crash, we thought that there would be no inflation. Right? We thought that essentially the economy is doing really poorly because when the economy is doing poorly and no one is spending money, no inflation happens, right? And why does inflation happen? Whoa, we're going to macroeconomics, y'all. Take some notes, right? Why does inflation happen? Inflation happens, and you asked about hyperinflation. We can talk about hyperinflation in just a second. Let's do some macroeconomics, right? Inflation happens because there is more demand for a good or a service, right? A lot of the economy is kind of rigged and kind of BS and doesn't make a lot of sense. But at some basic level, supply and demand does manage a lot of the economy. So if I'm trying to figure out why the price of something goes up, usually a lot of the time has to do with supply and demand. So when there are more people with more jobs and more money to spend, they buy more things, right? It's pretty easy to understand. So when people buy more things, right? Then there's more demand for those things, right? Because more people are buying those more things. Just Jump, hello, long time. Miss your face, someone 3300. Nice to see you, someone. I appreciate you stopping by. So if you're buying more things, then obviously there's more demand and prices will go up. So when you're in a bad economy, right? When there's a lot of people losing their jobs, like during the coronavirus pandemic, we were like saying, oh my gosh, this is the worst thing since the Great Depression. Literally, we've lost 10, 15 million jobs overnight, essentially, and no one's spending any money, right? Well, guess what? We've had all this stimulus packages come out. We've had generous unemployment benefits. Chichi Marie, the G-man, the G. Nice to see you, Chichi Marie. Are we still going on that date? Someone 3300. You bet it. You bet. Come to Nashville. You come to Nashville. So and I'm willing to meet up with people. I love talking to people. Anyway, gosh, I keep getting sidetracked by comments. So as inflation, you know, as because of the stimulus packages and all the money that's gone in, we've actually managed to turn around what people thought from last year to this year, the dire straits of our economy. And people were like, oh my gosh, the economy is not only going to do well, but it's going to boom. It's going to explode. And that's why people are saying, oh my gosh, inflation is such a big deal, which has been driving the 10-year treasury yield up, right? That's what's been driving the 10-year treasury yield up. So, but the thing is to understand there is as the 10-year treasury yield goes up and inflation goes up, even though the 10-year treasury yield went up, if now the inflation target is 2.5% from where it was before, maybe 1.5%, then you're not actually getting any extra benefit from investing in bonds than before. It's just kind of the natural cycle. So that's what I'm saying before. People, the market, and especially in tech stocks, have been falling. And I think what Super White Satan said, that tech stocks have been falling because they're investing in speculation for the future. That's absolutely true. When you buy a stock, you buy part of a company's future cash flows. As Riel says, hi amigo, ¿cómo está mi amigo? Nice to see you. So you buy a share of the company's future cash flows. That's money into the future. So you're speculating to an extent that this company is going to be doing money, getting more money into the future. And a lot of these tech stocks, like Apple or Microsoft, or especially growth stocks like Tesla, right? Like a Tesla, you know, they fall when the 10-year treasury yields are rising because it's now more expensive to have your money out there, right? So the thing is, though, we still have no alternative. Tina, right? There is no alternative. You're still losing money in bonds, even with the yield on bonds rising, because inflation is also risen. So if the yields on bonds rose to be above inflation, right, where you actually can put your money in bonds and not lose money, then it'd be a very different story. But we're not there. And I don't think we're going to be there for a long time. And also, people are thinking, and why does inflation happen? Remember, we were just saying before that inflation doesn't happen when the economy is doing bad. And if people think the inflation is going to be doing incredible, right? If the economy is going to be doing incredible and inflation is going to happen, right? That's because they think that there's going to be so much money going to the economy and everyone's going to be starting businesses and buying stuff and doing all this kind of crazy stuff. That's what causes inflation. So stock prices are falling because we think the economy is going to do well. You have to think about that. Stock prices are falling because we think the economy is going to do well. Like, try to process that in your brain, and that's how you know, the stock market is not a real reflection of the economy. The stock market is a reflection of how investors feel at any given time about the economy, right? So that's why stocks can sometimes be very disparate from the real economy. So actually, the real economy over the next few months is going to be doing better than ever, but stocks are falling. So is there going to be a very good buying opportunity? I mean, I do believe that as long as the economy continues to expand, and I don't see any reason why it wouldn't continue to expand unless, Corona, the new variant of Corona came out and it literally just kills everybody instantly and we have to all shut down again. That's a very different story. But barring that from happening, howdy from Texas, Caltex Tech. I appreciate you, my friend. Juan Sevilla, doesn't make sense. It doesn't make sense, right? But that's why the market is weird. It's kind of upside down. Running ginger stocks are about feelings, FML. Yeah, so, but that's what I'm trying to explain to you guys. Even though me and you both know these assets are probably inflated, it's probably in a bubble. But that doesn't mean that you can't make money as the bubble continues to grow, right? What would cause the bubble to pop? I can't elucidate a reason. I can't elucidate a reason for why that bubble is actually going to pop if people are literally, stocks are falling because the economy is going to be doing better, right? Feelings to the moon, Joy to Tours. Yeah, exactly. Hello, from Canada. Joseph Vincelli, 13. I don't know why I did a little British accent for you from Canada. Is it more like a Midwestern accent from Canada? I actually don't know. Pfizer, please. What's up, Andy? To the moon. Jason Rod, to the moon for you. So I've got to go back to a couple of questions here. Someone asked about Pfizer. Let me speak briefly on Pfizer and why is Pfizer going up and down. And this is what I encourage people to understand about biotech stocks and especially pharmaceutical stocks. No, it hey for Canada. It hey for Canada. And how's the housing market going to fall in all of this? Running Ginger. I'll try to get to that question in just a second. Let me talk about Pfizer real quick. When you're investing in healthcare stocks and biotech and pharmaceutical stocks, these stocks are very, very hard to understand. These stocks are almost impossible to understand whether or not they're going to do well or bad. Because literally, when Pfizer got its announced, like last year in November, wasn't it in November? Pfizer said, yo, our vaccine works. We got things approval from the FDA, right? You got literally, the stock like went down, essentially. Like you didn't get any boost. And why is that? I personally don't know. A lot of these companies, it's because they require, there's a couple reasons behind it. They have a lot of federal government regulation, right? If you're making a drug, it has to be regulated by the FDA. They have to do a lot of lobbying. They have to like go bribe a bunch of politicians. They have to do all this kind of stuff. And it's hard to really model their business model, and then they have things like generic things expiring, and then you never know about their supply chains. And if you're like someone like AstraZeneca, you can have your entire business model thrown to the dirt because you had a couple people having blood clots like they were having in Europe, right? So I advise people, unless you are really studying the pharmaceutical industry and you have some insider knowledge and you can read some people who study pharmaceuticals and that kind of stuff all day long, it is hard to say, I have good news about the company and the stock is going to go up. Very often it's the opposite. And I personally don't know why, because I don't study it. It's hard to know. Isn't Pfizer like a dinosaur though, Juan Sevilla? Yeah, I mean, it's an old company. And if you look at their stock price, it's literally gone up and down and up and down. I don't have any understanding of it. Tell me about it. You used to work for Genzyme back in the day. Stock went from med to splitting, Running Ginger. Yeah, like it's hard to understand this industry. So I do recommend everybody, unless you can dedicate extra time to studying this industry, then not to be in it. And I have no expertise in it. My only expertise is trying to figure it out and reading a bunch of analyst reports and still being more confused after the fact. So I don't invest in them. And if you can find some people who are more knowledgeable than me, I would highly encourage you to do so. Party Mama says, hi, Andy. I appreciate you, my friend, from stopping by. Matt Glenn, you're all in on DraftKings. What do you think about the stock? What do I think about DraftKings? I mean, I think DraftKings and FanDuel and BetMGM and all these companies that are going big into sports betting, it's coming. That thing is going to become, as sports betting has become legalized and it's becoming legalized in more states, like they just allowed it to be open in Tennessee, I do think those companies are going to do well. My only question for you is, I don't specifically know for DraftKings the current valuation of the company. Like, as I said before, guys, the whether or not a company is going to do well and be monetarily successful is different from its stock price. Whether a company is making money is different from its stock price. For example, look at GameStop, right? Company losing a lot of money, right? But it doesn't matter. People like the stock. Monkey liked stock on Reddit. Stock go up. It is about feelings some amount of the time rather than facts. And the facts come out only to justify people's emotions. And that's the thing you have to understand. And that's not just stocks, that's human nature in general, right? We feel something, we want something emotionally, we decide it ahead of time, and then we look for information, often facts, to try to confirm our hypothesis. That's the downside of being human, but it's also what makes us human, right? So you have to understand, stocks at the end of the day are owned by human beings. Whoa, isn't that crazy? So let me try to catch up to a bunch of the other comments here. Someone asked about the housing market. What's going to be happening with the housing market? I think if you guys know anything about the housing market right now, it is the most crazy housing market we've ever seen. We have the most crazy housing market we've ever seen. You have, like my gaming chair, you have the same one? Hell yeah. It's for my back. It's got that good lumbar support. Running Ginger said the crazy relationship. Thank you for this. Your mind is blown. Yeah. It is a crazy relationship, right? You and your money in the stock market. Anyway, let's talk about the housing market, right? really quick. If you know anything about it, we are pretty much in the craziest. Yeah, it's hot, says Juan Sevilla. BNTC, Chaos Phoenix, I don't know anything about it, but I'll add it to my list of things to look at. The housing market is the craziest we've ever seen. Essentially, in some cities, there are more realtors than there are actually homes for sale. Like in Austin, there are literally more realtors than there are homes for sale. I think Seattle is the same way. And isn't that crazy? And what's pushing the housing market so high, Party Mama? Samuel Verdoza, what do I think of CCIV? I can talk on CCIV in just a second, Samuel Verdoza. What is pushing the housing market so high? It's the historically low interest rates and the lack of supply. And so let's get into that, right? Supply and demand, right? Whoa, supply and demand. And this is what's causing affordability crises in America because prices are going so much. Housing market in Toronto's nuts right now, 300 to 400 over asking. Yeah, it's crazy. It's crazy, right? No supply. So let's talk about why these things are happening. So first, let's talk about interest rates, right? Even though interest rates over the past couple of weeks and past couple of months have been rising, it is still historically low. Like compared to even 2 years ago, interest rates were like at 4.5%, 5%. Okay, about 2 or 3 months ago, you could get an interest rate, you could get a 30-year loan at like 2.5% or 2.75% interest rate, which is crazy, right? If you think about it almost to inflation, indexed to inflation, that's virtually like you're not even spending any extra money out of your pocket because of inflation by the end of your 30 years, right? Because if inflation's at 2%. So literally, when you have interest rates that low, you open up the affordability of housing for people. People can afford to pay more for a house, right? And I need you guys to understand this. This is something to understand when you look at buying a home. When you buy a home or even are renting an apartment, you're not buying that house, right? Unless you or have like $300,000 or $500,000 in cash to throw into a house, and very, very few of us actually have that amount of money in cash to throw into a house. You're not buying that full price property. You're buying a note. You're buying a payment. When you look into how much home can you afford, it depends on your mortgage payment. So used to be 2 or 3 years ago, your mortgage payment of $1,500 could maybe only afford you to buy a $300,000 house. But now, because interest rates are lower, right? Interest rates are lower. Gen VV says hi. Hello, Gen VV. What's the interest rate on 30-year today? I think it's in like the 3 range, right? In the 3, maybe 3.25, 3 to 3.5 or so. Still very low. So compared to a couple years ago, let's say your $1,500 mortgage could buy you a $300,000 house. I'm just spitballing here. I don't know if that's actually true. Today, it would be a $1,500 mortgage payment would be buying you a $400,000 house. So all of a sudden, people can afford a lot more house. So demand is a lot higher. Yeah, 3.25, easy sat. Okay, thank you. So you have way, way, way more demand. Plus, you have people from especially leaving big cities, right? Like in New York, like in LA, coming to Nashville, like coming to other cities, coming to Toronto, coming to other places, right? And they're trying to buy homes. And there are not very many homes, right? Because of pandemic related reasons. So now you have cheap interest rates. You have a lot of people wanting to go to especially smaller cities that want to be buying homes when there's already a limited supply, right? And the third factor is that home prices to build are very expensive right now. Lumber is at the highest price it has ever been. Pretty much highest price it has ever been, at least over the last 20 or 30 years. So literally it costs home builders $20,000 to $30,000 more than it used to build the same exact home because literally the wood is more expensive. So now you have also not only a huge amount of increased demand, you have a lot less supply because home builders can't build new homes. They're more expensive to build. And also because of coronavirus, people who wanted to move last year didn't move. So a lot of them haven't put their homes on the market. So you have a lot less homes selling too. So you have this wild confluence, right? You have this wild confluence. $8 for a 2x4 sheet of plywood. Yeah, it's crazy. It's great. $50 a sheet plywood. Who would have thought that? Literally a year ago, a sheet of plywood is like 25 bucks. It like doubled in price. That is insane. So with all these factors, that is why the housing market has been hot, right? So now the inevitable question is it going to crash? Are these factors going to sustain forever? The answer is no. Interest rates are going up. Monica Velka, you saying you're buying a beachfront home in Galveston, sight unseen? It's that competitive? Yeah, it's that competitive. I helped. I'm a real estate agent as well, so I helped one of my buyers purchase a home in Nashville, Tennessee. We made 6 offers, right? And each time we offered, there were 8 or 9 other competing offers against us. The one we bought, we had to buy sight unseen. I've never done that for a residential client before. That's the thing you do for an investment property. But I had to do it to just get that contract in. TC Cooksey says, congrats, Monica. Yes, congrats, Monica. Congrats to you. So anyway, the point is, for the housing market, is this sustainable? No. The answer is no. All these factors is not going to continue forever, right? You're going to have eventually these interest rates creeping up. You're not going to have as much pent-up demand to buy into single-family homes. You're going to have more people, as coronavirus is waning, be willing to move again, right? Especially as the economy is opening again and you can afford to move again, right? So these things are going to be trickling down, right? It's going to be less and less. But I do want to put a caveat there. At the end of the day, there is still not enough supply. Even as lumber prices start to fall a little bit and start to normalize, there's still not enough land and not enough builders building homes. This is not 2008, because compare this year to 2008, we have almost no homes being built compared to 2008 when the housing market crashed. Because back then, people were building out subdivisions way out in the middle of nowhere where nobody was living, just to put up homes because home prices kept rising like 10% every year, and it was a free money party for everybody involved, right? Unless you were the guy holding your mortgage payment when your house value fell and you got hurt a lot, right? Happened to my parents. Like, they bought a house, I think it was like $400,000 or $500,000 in 2001. By 2009, that value had increased to 900 grand. It like doubled in like 9 years, and then it fell back down to 400 or 500 literally during the crash, right? So unless you were them, you got really hurt, or unless you were the regular human being, you got hurt really bad, and then the other people made out like bandits. Anyway, the point is there's going to be a lot more homes coming onto the market, and then people are cute. You say 22 million homes in forbearance. Yeah, eventually programs like that are going to end. Eviction moratoriums are going to end, right? There's going to be more supply there, and it's going to take some pressure off, but it doesn't solve the fundamental problem. We have too many humans and not enough homes. I work to promote housing affordability. I really that's part of my job, is what I want to do. I work for the homelessness council, the homelessness planning council for Nashville. I'm on their resource development committee. So I was chosen to help with them with that. Literally, and homelessness is a direct function a lot of the time, some percentage of it, right? 50% or so, because housing is too expensive. And obviously there's mental health and drug abuse and all this other stuff too. But housing affordability is a huge reason why people are homeless, right? And so I literally study this stuff all the time. We do not have enough homes. We literally have just too many humans, not enough houses. And even as homes come on the market from things like forbearance, from more people selling their homes, right? You're one of those real estate bandits who tripled your money. Good for you, Mountain Man. I'm glad you made it out. If you were there's just not enough. We have so many people coming in. Population is still growing, especially in these secondary markets, the Sunbelt markets. Population centers of from New York are moving down here, because New York is already way, way, way overvalued anyway. Even as it comes down, my average condo in New York went from $1.2 million to $1 million. It's yeah, that really solved the affordability crisis. No. So we're just spreading the amount of expensiveness all over the world, right? All over America. So my theory is that I don't think we're going to see a massive housing crash. Also because we don't have as much bad loans as we did in 2008 or 2009. Crazy right now. You need like something 400,000 in California. Stop driving up places. Prices, yeah, running ginger. It is crazy, right? So literally, gosh, what am I trying to say? Every time I read a comment, I try to respond to you guys' comments and then I lose my train of thought. Housing, affordability, something. Oh yeah, what's going to happen to the market, right? I think that the price gains are going to slow down in the housing market. Price gains are going to slow down, but I don't think we're going to have a massive crash because compared to 2009, we don't have as many bad loans. When we literally had ninja loans, and what is ninja? NINJA. No income, no job applications. You could walk up to the counter, you could say, hey, I'm making $300,000 a year. And they wouldn't care. They'd give you the mortgage and they'd let you go to town if you had a good enough credit score, right? They literally just let you have free money. We don't have that anymore. I wish we had that. Wouldn't that be nice? Actually, no, I don't wish we would have that. That would be, our market would be really screwed. But the point is being said, the safety of the mortgage market is a lot safer. So what I expect to happen is, we're no longer to see 10 to 15% price gains because I've been studying some of these markets. Nashville's price gain since last year in home values from this year to last year is 10 to 12%. Atlanta was like 15%. Austin was like, I think Austin was like 15 to 17%. So some of these places literally going up 15% per year. That's not going to happen ever again. You don't want your home values to be going up 15% every year. That's going to be really crazy, right? You would make more money as a real estate agent if we're still like that running ginger. Yeah, I mean, absolutely. People printed money. It was literally printing money. It was free money from everybody back in the day. It's not like that anymore. So that means our market is healthier. But essentially, I think that these price gains are going to taper off, right? And they may even slow. They may even slow to like 2 or 3% per year, which we haven't seen in a long time. But that would be a lot healthier for the market anyway. I very, very much doubt we're going to see a major crash. Also because of the reason I said before, big companies, big private equity groups are buying also a lot of the homes, right? Look into companies called Blackstone, and Invitation Homes. Their companies, Wall Street companies, have literally bought up like 10 to 15% of the single family homes and turned them into rentals, right? That's removing supply from the regular home buying market, right? And those guys are building and buying more and more and more single family homes to rent, right? And that's obviously going to put a damper on the market, even as we increase supply in other sectors, right? Property taxes are crazy because of this user 3309. Yes, absolutely. Your real estate agent is saying San Diego will increase 8% this year, Gen VV. Yeah, that's crazy. TC Cooksey, they have a no money down loan through HUD and the government. Yes, they do. But that's for like first time home buyers and stuff and veterans. Veterans loans, you can get a 0% down loan. It's very different, right? Those are not the people who are going in and speculating in the market, which actually causes the problem, right? That causes the problem. And two families, they took one family to two. Super White State. I'm not sure what you're trying to say. What you mean by that? I'm not sure what you mean by that. But anyway, hopefully this helps us understand a little bit about the real estate market there. So I'm going to try to catch up to some of these other comments that people have asked me. Oh, someone asked me about. Someone asked me, unless anyone has anything very pressing about real estate right now. Someone asked me about CCIV, and I have talked many times on this channel about CCIV. So my friend, I don't know if you're still here. Who asked about it? CCIV. Let's see. CCIV. Samuel Dervosa. Oh, they made one family homes and divided them into two. Super White Satan. Yeah, well, I'm actually in support of that. I'm actually in support of that. I want us more. Yeah, Samuel Verdosa, that was you. I appreciate it. Thank you, by the way. You're welcome, Running Ginger. What do I think about CCIV? So we can talk about that really, really quickly. CCIV is a stock, right? That is set to buy Lucid Motors. Lucid Motors is an electric vehicle stock that is supposed to compete with Tesla in the high-end electric sedan market. right? I've been talking actually about Lucid for a long time, and I wish I had these recordings when I first started talking about it a couple months ago. I would break down all the price, all the valuation for you. But we're a little bit past that point now because there's a lot of momentum gone from Lucid stock. But in terms of the long term, I think Lucid is kind of settled in to where it's going to be for a while, right? In the $20 to $25 range. I don't think we're going to see any major price movement from there. And that's because people have decided that the valuation of Lucid is somewhere into the $40 to $50 billion range. And as we are having these problems with Tesla selling off and the 10-year treasury yield increasing and all these other negative tailwinds against, or headwinds, I suppose, negative headwinds against tech stocks in general, especially against electric vehicle stocks, you're not going to see a lot of movement from Lucid. And obviously, there's also a couple problems with Lucid, that Lucid is missing its sales quotas, right? They're saying they announced a bunch of pre-orders and they won't tell you how many pre-orders they are. They're going to make less cars this year than they said at the beginning of the year. Their factory is going to take 3 or 4 more months to complete than they thought. These are all problems. And obviously, these are all problems that Tesla went through as well. And I don't think Lucid is going to fail as a company. I think Lucid is going to actually probably, in the long run, succeed as a company, right? And because especially they are a majority, or not a majority, but a significant chunk of their money that is invested in Lucid is owned by the Saudi Arabian pension fund. And let me tell you, the Saudi Arabians have unlimited money, okay? They have unlimited oil money. They're not going to let this car company die. You know, even if this car company is failing, they're going to bail them out. They're going to find a way to make it work. So I'm not worried about this company failing. I just do think that you don't have a lot of room for price growth over the next few years. And the reason is that I compare it to what is theorized, this electric vehicle stock or company of, what's it called? Rivian being a company that's set to make SUVs and it's most importantly electric pickup trucks, right? And those are really cool, by the way. I want one. I really want one really bad. If I had the money for it, I would buy one. But Rivian is rumored to be at worth $50 billion, which you can go search up. Now, no one knows if that rumor is actually true, whether or not that's actually going to be worth $50 billion, but it's rumored to be $50 billion. So we can compare pretty directly a Rivian to a Lucid and to a NIO, right? NIO is a Chinese car company that's going to make 80,000 cars this year, give or take. They make 20,000 cars in the first quarter, okay? Lucid, on the other hand, is making 7,000 cars maybe this whole year. And they're worth about the same. Like NIO's valuation is like closer to the $50 or $60 billion mark right now. You're telling me that they're worth about the same? They should be valued about the same right now? I kind of have a hard time believing that. And also, I have a hard time believing that Lucid should be worth the same amount as a Rivian, right? When Rivian is going into a different market, is targeting the electric pickup truck segment, as opposed to Tesla, which is targeting, or opposed to Lucid, which is targeting the high-end electric sedan segment and competing directly against Tesla, right? So I honestly, even at this price, I think I would probably rather own Rivian if we're Republic or NIO than Lucid. But that doesn't mean I don't think Lucid will succeed. I just think it will take longer for it to get the price gains that you want. And that's something to understand too. When you look at a company and you're like, okay, this company is going to do well into the future, right? As we said before, even if a company is going to do well into the future, that doesn't necessarily mean their stock value is going to be reflecting that, because people might have done something called pricing it into perfection, right? Pricing it to perfection. So a lot of stocks, especially tech stocks like a Tesla, are priced to perfection. And what that means is that they're already potentially assuming all of the potential good things that can happen and the new growth and the Biden administration building a vast network of charging stations across the country. And so if one bad thing happens, you're not going to get the growth. And if a good thing happens in the stock price, and if a good thing happens, it's going to stay flat. And that's maybe, and this is why we've also, the secondary reason we've been seeing a lot of pullback in tech stocks is because a lot of these stocks were priced to perfection, right? If anything good happens, it's like, okay, we expected that. And if anything bad happens, they're like, oh crap, time to dump. right? And just because the company is actually going to succeed and sell more cars or be successful into the future doesn't necessarily mean that their stock price is currently reflective of how successful they're going to be. So that is something to understand there, right? TC Cooksy, you want the AMC Hummer pickup 4-door 0 to 60 in 3.3 seconds, goes 300 miles on charge. Yeah, the Hummer, that Hummer looks pretty cool. Tesla's releasing a truck, Super White Satan. Yes, Tesla is releasing a truck, but it's going to come out after the potential Rivian truck that would be coming out, right? That's why I'm saying Rivian would be first to market there, and why they would have an advantage over what Lucid is doing. Tesla is the first to market in luxury electric sedans, and Lucid is coming in to be number 2. It's a different experience, right? Speculation. Yeah. Nicole TikTok says, LOL. Yep. CLVS, many thanks, says Menzenal Sowe. I don't know about CLVS, Menzenal, but again, add into my list. You sold your Tesla stock today. Market's too shaky. Too shaky? Yeah, the market is very shaky, and I've been saying this for a while now. Y'all, the stock market, we're going to be continuing to trade in this sideways pattern until the yields stop rising. Which I don't think it's going to probably stop in the 2 to 2.25% range of the 10-year treasury yield. Until they stop rising, we're going to have days where it goes up, then pulls back, and it goes up and pulls back. And people reset their expectations, then it pulls back again. Like, oh, Lord have mercy. We're at a dangerous time right now where you're not going to be seeing a lot of current gains, but that still doesn't mean I actually do think we still are in a bull market for the long run. That just means that for right now, right, for the next maybe couple of months, we're not going to be seeing huge price gains like we have been over the last year, right? And that's the big difference there. What was that stock that someone wanted me to write down? I was trying to write it down. CLVS, right? Okay, perfect. What pushes the 10-year, party mama? What pushes the 10-year treasury yield up? Okay, so remember, how do bonds work, right? Bonds work as a function of supply and demand, right? And as 10-year treasury yields go up, that actually means demand for the bond goes down. As yields go up on a bond, demands go down. And I know I'm saying that very slowly and repeating it a lot, but it's kind of hard to understand unless you can really picture it and you're used to the understanding how the financial work of it. Because as I've said before, right, if I buy a bond from the government says, I give them $100. The government says, I'm going to pay you 1% on your money every year. I'm going to give you $1 in return every single year. So you have a piece of paper sitting in your, in your wallet saying, hey, the government will give me $1 every year. That's what you're doing when you buy a bond, right? So you gave them $100. You're essentially loaning them money and they're paying you interest rate on it. Think of it that way. You're loaning the government money and you're paying interest on it. Think about that. The government's taking your money when you buy bonds. How about that? Isn't that fun? Anyway, the point is, so when bonds are in demand, right? When more people want to buy bonds, right? The price for bonds goes up, right? Supply and demand. The more demand it is, the higher the price goes. So as the price goes higher, let's say you originally bought that bond for $100, but actually someone comes to you and says, hey, I really, really want that bond. I'm going to pay you $110 for that bond. And you're like, okay, deal. I bought it for $100. I'll sell it for $110. So they buy that piece of paper from you. But that piece of paper says you're going to get 1% return or $1 from the government every year. So they just spent $110 to buy that piece of paper that says the government will give me $1 every single year. So as the bond demand and bond prices go up, the yield goes down. So you actually paid $110 to only get $1 per year, as opposed to when you had first bought it, you paid $100 to get $1 per year. Okay? So that's when demand for bonds are high. When demand for bonds are low, the price of the bond is going to go lower. Let's say you try to sell that bond that you bought for $100, that's giving you $1 per year, right? And you try to sell it, but no one wants to buy it, okay? And someone only is willing to buy it, let's say, for $50, right? So all of a sudden, you have to sell it for $50. Then that person bought, instead of what is a 1% yield on the bond, If they bought your bond for $50 and they're getting $1 per year, then they're getting 2% yield, right? Because there's less demand, right? Party mama, why get in bonds? You shouldn't. As an individual investor, you shouldn't, because they don't give you any money. That's just explaining why it happens. So if there's less demand, you're going to get a higher yield. So what is driving yields up means there has been less demand for bonds, okay? And why is there less demand for bonds? There is less demands for bonds because people think the economy is going to do well, right? The economy does well, right? When people are going back to work and the COVID vaccine is going out and everyone can get their jobs again and we have a bunch of stimulus, right? Makes sense. So why do people buy bonds? Because bonds are safe. They are guaranteed by the US federal government. The federal government says, I will give you $1 every year, so help me God. And you know that dollar is safe because the US federal government has a bunch of tanks and airplanes and, the entire might of Washington, D.C. that's saying that they have to give it to you, right? So unless the US federal government fails, then you're going to get paid out on your bond, okay? And if the US federal government fails, it's the end of the world anyway. We're on Independence Day with Will Smith or whatever, and we might as well just be abducted by the aliens because game over, right? It doesn't really matter whether or not you're getting your 1% return on your bond yield if the US federal government is gone. So, that being said, it's about as safe of an investment as you can ever make at all, right? And people invest in super safe investments when they think the economy is going to do poorly, right? You make no money. Party mama, yes, they invest in it not because they are gonna make money off of it. They just want to keep their money safe. They're like, oh my gosh, the economy is collapsing. I want to keep my money safe. So even though I'm losing money to inflation on my bond, I just want to keep it safe because some of the really uber wealthy guys. So remember, when you put your money into a bank account, it says FDIC insured up to $250,000, right? FDIC insured up to $250,000. And so you might be like, okay, I'm never gonna have 250 grand in my bank account, or even if I did, I could split it up into a bunch of accounts so that if the bank ever failed or something happened, that I would get my money back because it's protected by the federal government. But guess what? When you have $1 billion, do you know how many stupid bank accounts you would have to open to have all that money protected? You can't. It just takes too much effort. Right? So it is the big institutional guys, the billionaires and the hedge funds that manage trillions of dollars. They buy bonds because that's the only way they can guarantee their money is safe. Just tell them it's insurance. Oh, super white statement. Yeah, it's like insurance, right? You're spending money, right? You're losing money to the bond yield not being very high and inflation. But essentially, you are, as super white statement said here, taking out insurance against the fact that something might fall, because as a big institutional wealthy investor, you don't have that same FDIC protection of putting it into a bank, right? Where you would otherwise just put it into the bank, right? And if you're putting it into the bank, you might as well at least earn some percentage on bonds, because if you earn some percentage on bonds, it's better than the 0.0001% interest rate you're getting from your bank, right? So that's the difference and why people buy bonds in the first place. You should never buy a bond. You should never buy a bond because you're losing money. Unless bonds for some reason went up to 10% yields again, right? But you personally should not be buying bonds because that's a waste of your money. But that's why people do it in the first place. So as the economy continues to go up, bond yields are certainly going to continue probably to go up as well. And we're going to probably level off at about the 2 to 2.25 percentage point, I think. I think it's going to be hard to push it any further as long as the Federal Reserve interest rates are low, right? And they said they're not going to raise it. The Federal Reserve said they're not going to raise the top level central bank interest rates for 2 or 3 more years, right? So that's what's going to happen. What's my thoughts on bingo? Pat GNC, I don't have enough informed information to talk about bingo. I know it's like the genomics company, right? I'm pretty sure. I haven't, as I've been telling people before, I'm no expert on pharmaceuticals and biotech and genomic stocks. And so I don't like to make opinions about it because like I'm really behind on it. I'm really behind on it. Don't really know anything there. Anyway, um, 759 AK asked me what did I eat for lunch today. What did I eat for lunch today? 759 AK. I don't think I even did. I even eat lunch. I was out and about doing work. I think I only ate a bunch of granola bars. Pat GNC, thank you. Yeah, I'm sorry I can't help you a little bit more there. But people have asked me to look into bingo, and I'm like, I don't know how to value this appropriately, and I'm gonna give you misinformation. And that's the last thing I want to do. If I talk about something to you guys, it's because at least I've done some research. I feel fairly confident in my explanation about it, but something like that, I don't have any information. Am I listening to Carlos Vives? Gallia Abel? Yes, I am. I love me some Carlos Vives. I used to do Latin dance in college, so Carlos is my boy. Carlos is my boy. I am Izzy. What's up with TCAT and JFIN? TCAT and JFIN? I don't know. I am Izzy. I don't know if those are, and I'm writing these down. I don't know what is going on there. Greg Apparoso, what is my involvement in real estate? Cool, you too, Galliable. Yeah, hell yeah. I stand my boy Carlos. Anyway, how is my involvement in real estate? Greg Raposo. My job as a so what I do for my day job, I'm a essentially commercial real estate analyst / asset manager for a development company. Essentially, that means that I'm the guy who figures out financial modeling, projections for the future. How do these projects make money? I line up the financing, I line up the investments and the debt and the equity and all these weird terms, right? And then I'm setting on the models for a 5 or 10 year projection. I'm running like the demographics and the comps and comparing like all these different properties together. And I'm also looking at, and this is why I have some expertise here, I'm also looking at businesses and evaluating businesses. How is their business model going to do? Because when you try to lease to somebody, right, you want to know that their business is going to do well. So I have a very kind of top level understanding of the valuation of companies. And I've done a bunch of, entrepreneurship stuff in the past where, I've been through a lot of pitch competitions. So I understand how companies should be valued, at least in the broad sense. So translated to stocks, this is why I usually talk about stocks here and Bitcoin and cryptocurrencies here as value investments and long-term valuations, because that's really what I understand and what I'm good at. There's actually a lot of BS sentiment stuff that goes on and wishy-washy emotions that go on with the stock market and the day trading and the swing trading. I don't really know anything about that, right? And I'm not an expert. It takes a long time. AKA he's the wicked smart guy. No, running ginger. I just have to sit and do spreadsheets and I'm really sad. You work in the mall retail industry? No. So what we do is our development company. And here's the pitch, right? At Hamilton Development, we focus on creating micro units to promote affordability, sustainability, and entrepreneurship. Wow. I got that pitch on lock, y'all. So anyway, we're essentially a very forward-thinking company. We're trying to create spaces that are affordable for people, right? And it's not only affordable in the residential space and trying to create, apartments that people can get into. We're also trying to promote entrepreneurship. Because, for example, if you're you're in a city like Nashville, you want to open a restaurant, it costs you a lot of money to build a restaurant space. So we're trying to figure out how can we redevelop old spaces and allow you to start your restaurant, right? And that's what we're doing. We're converting an old car wash into 6 little restaurant bays that is virtually like each one is like a food truck stall. But, we're also putting out little patio seatings and we're making it affordable for people to start restaurants. And we're providing little miniature mini or micro office space as well for startups, for entrepreneurs, for legal people, for whatever, right? So that's what we do. Product Athlete Cute. Yeah. So that is what we do in terms of our development thesis. So we do a lot of adaptive reuse. We're very big on sustainability. We want to promote walkability and access, especially to the community, and integrating people and making sure that people that we're investing in and the developments that we're investing in, the people around in the surrounding community are also brought up with the level of the investment and not just left behind. So yeah, that's what we're trying to do there. Anyway, so I also do my personal real estate investments where in college, in my senior year of college, I flipped a house, right? I flipped a house and turned it into a rental. I did the whole demolition thing. I knocked down a bunch of walls. I lost a lot of money. But I learned to install plumbing by myself and hang drywall and do all this kind of stuff that I never thought I would have to do, but I had to teach myself in order to save money. And I ran a small contracting business actually during the coronavirus pandemic because of what I learned, and did some contracting work for people. So I know essentially everything about the real estate development, from literally the demolition, putting up carpentry, doing drywall, doing the plumbing, doing the electrical, and the investment side on the single family side. I've worked as a realtor throughout college. And then now I'm on the commercial development side as well to do commercial real estate development. And so I've kind of run the gamut on that entire real estate development side there. Um, you're a real estate developer and property management company in Queens, New York. Do you work with small companies? Greg Raposo. Yeah, absolutely. Hey, Greg, I mean, like, if I'm always happy to work with people and always love to connect with people. If you want to like send me a DM on Instagram or something, like we're always happy to connect. Like, we want to find people obviously who are like-minded and who want to, promote the future of what real estate can be and really transforming it from an industry that is like all stuck in the like 1980s and very boring, and everyone builds the same cookie cutter crap all day long. And we want to, every project that we do, we want it to be cool. Like, my boss is 28, I'm 23. Like, we're young guys. We want stuff to be cool. We want a building to be memorable. And also, we want it to obviously make money, but also be part of the community. So all of those things are competing, balancing there. You want the big bucks, a lot of work, but one big commercial sale is a year's salary. Yeah, these projects can make a lot of money if you have the vision and you have the foresight to go into commercial real estate development. And, as a private investor, how maybe one of you guys could get in is to invest in a company like ours, and I'm not saying invest in my company. I'm saying there are lots of people who do real estate development and real estate syndication out there where you can give them some amount of money and then you can get a large return, right? And essentially, and that's what when you're investing in those kind of companies, it's different from investing in stocks, right? Because when you're investing in stocks, you pull the trigger, right? You decide what to get, right? But some investment companies, like real estate investment companies especially, they're going to say, I'm going to give you 10 to 12 to 15% return every year for all the money that you give me, and you don't have to do anything, right? You give them the money and they're going to give you 10% per return per year, and you literally do nothing, right? And so there's always a balance there when you're trying to figure out your own personal portfolio. You mean a real estate commission, TC Cooksey? Yeah. That's why I have a broker's license as well. Super White Satan. It is risky. It's risky to be, especially on the developer side, and also it's risky to be investing your money that way as a passive investor. But that's why you need to look for people who have a long track record, a good track record of producing good investments that are going to protect your money, right? That's the number one thing. And this is what I advocate in general, and this is why I talk about so much. And people talk about, like, one of my friends, or I say friends, you all are my friends, right? So I don't remember who the person was. One of the people in the chat asked me to talk about AFRIA, right? To talk about CCIV. The reason why I talk about all these stocks all the time is because I see a lot of people rushing into them because of momentum, because of fear of missing out. And I like to give the analysis here of sometimes there is risk involved. Whoa, money doesn't go up to the sky always. Who knew? Because a lot of people, especially who are following my channel, found me through a lot of the GameStop stuff, right? And when the GameStop was going to the moon, people were like, okay, money goes up forever, hooray. And that's not the case. That is not the case. Slow down, you're rushing, Scott Gunk. Am I rushing? I thought I was doing pretty good today. But thank you for letting me know, Scott Gosh. If you have money, it's a good investment. If you're just starting, it's a big no. Super White Satan. Yeah, I wouldn't be throwing all my money into real estate if that's all the money you have. Absolutely not. No, absolutely not. I ran out of my Carlos Vives. That's so sad. You're fine. Pad GNC, you're doing good. Just Mano, thank you guys. I take all feedback. So all feedback is welcome. You're not gonna hurt my feelings. You can say, Andy, you're stupid. Andy, you're ugly. Andy, I hate you. Like, you're not gonna hurt my feelings. I feel good about who I am. But like, I do like the constructive criticism, because I know one of my friends in here told me before, it's like, hey, Andy, sometimes when you're talking really quickly, your voice gets super high pitched and then it's harder to listen to. And I think I've done better on that over the past few days because I remember that. Just wanted to stop by. You have a deadline to get some work done. Prodigal athlete, go get that work done. Go get that bread, my friend. You take care of yourself. Okay, let's see if I can catch up on any of the other comments that I missed out on here. Okay, this is a long way away. Thoughts on AMC? Okay, Pat GNC, let's talk about AMC. You're doing great, Scott Gunk. Oh, thank you, my friend. AMC, right? I've talked about AMC a couple times now, and let's see what happened to AMC stock today. I actually haven't checked it. Okay, it's been falling. That's kind of what I thought. Hey, my friend Just Julius isn't in here. And Mountain Man, I don't know if you're still in here, Mountain Man. But I had a couple of friends in here who had AMC stock. Just stopped by to say hello and thank you, Kim Kaplan Barnard. Thank you, Kim. I appreciate you. That means a lot to me. I don't think I've seen you very many times or commenting in here before, so I appreciate that you commented. Steel2111, you've been thinking of real estate for a while, looking for a new venture and thinking about a food truck. Steel, I can talk a little bit more about that in a second. And AMC was losing money even before COVID. User 5565. Oh my gosh, user 5565. You brought up the exact topic that I always try to tell people about AMC. So first, I don't think any of my friends who usually talk about AMC are still in the chat today. So otherwise they would validate me and like back me up that I've been saying this. But when AMC hit 14 bucks or 12, 13 bucks a couple weeks ago, I was like, y'all, this is probably about as good as it's gonna get. And you should get out now. You should be very, very happy with your gains, right? And I was telling people, it's like, we've reached a point where we rode the momentum train. We were doing really well. You bought 13 and sold 14. Good for you, party mama. I'm glad for you. I'm glad you made some money there. So you're out of AMC at 14. Yeah. So good for you guys. I'm glad you took your profits, right? AMC obviously right now is at 10. Y'all, it's going back down. It pumped purely. You have been saying not to invest in AMC, IBM, Mark. Yay! So validation, right? And obviously it's gone down since the couple weeks ago when I was talking about it, right? And the reason is that it was only riding purely based off of momentum energy. And it was like, oh, California is going to open its AMC theaters. Great. You know, how many people are going to go, especially in California where they still have like social distancing restrictions? It's like when the theaters open, look, when the theaters open at 25% capacity, they're not making any money, right? They have to pay a lot of staff. They have to pay the electrical on the building and the plumbing and all the utilities and all the insurance and all that kind of stuff on that building to open at 25% capacity. And all the staff in there and all the labor and all the insurance on their staff and the workers' compensation, all that kind of stuff they have to start carrying now. And then also, you know, they make their money not from showing the movie tickets, which they're probably selling at a discount, but they make their money from the popcorn. That's where they make their money. When they sell you that $20 bag of popcorn and you're like, what the heck did I just buy for $20? And it's covered in butter, and after the end of the movie, you feel really bad for eating the whole thing, but somehow you ate the whole thing anyway, and even though you knew it was going to kill you and like take years off your life, you ate it anyway because it was like 20,000 calories and you really were hungry. Anyway, that's how they make their money, right? That's how they make their money, is selling you overpriced soft drinks and popcorn, not from having the theaters open and showing you the film. So that's the problem. When you have 25% capacity, you're not having as many people buy popcorn, right? $9 popcorn. Yep. Concession is where the money is. That's absolutely true. So that's the problem with AMC too. And who was it? It was user 5565 here who said that AMC's been losing money for a while before Corona. And that's what I've been telling people too. It's like, look, all these things, the economy opening again, of course it's good for AMC. I'm not stupid, right? Of course it's good for AMC. That's why people are buying it. Because they're like, oh my gosh, economy opening up. It's going to be good for AMC. But you have to think about AMC long term. AMC before Corona was a money-losing company, right? Think about theaters 10 years ago, right? Or 15 years ago. When I was a kid and went to a movie theater, and do you remember how it used to be? You didn't ever in America, you know, choose your, like, you couldn't reserve your seat. You would always just like have to show up early to the movie theater, and then hopefully you got a good seat. And all the seats were really small and narrow and really cramped. Over the last 5-10 years, a lot of movie theaters have rebranded, right? Have redeveloped. They put in the nice plushy chairs, right? They've added food service. They've added meals. They've added drinks, right? That you can recline in your chair now. Now you can reserve your seat, right? You can pay extra for the best seats in the house, right? That's something that has only happened over the last 10 years, right? And the problem there is that with all that new investment in all that stuff to try to get people to come back into movie theaters, literally they were already losing money to Netflix and people willing to wait 3 months. They're like, okay, whatever. I don't have to see the movie right now immediately. I can wait 3 months to see it at home. And now there's always going to be people. There's always going to be a segment of people who love to go into the movie theater, who think it's an experience, who want to see the movie on the big screen. And that is great. That's always going to exist. There are going to be people who want to see it on this giant 3D IMAX screen and eat overpriced popcorn, right? The problem is there that they were unprofitable before the pandemic. So even if those people continue to exist, right, there's going to be a certain amount of them that's going to be less. I think that everybody has to agree with that. So think about it this way. They had whatever AMC had in terms of ticket sales was 100% capacity. Let's just say 100% capacity in 2019 before Corona, right? After Corona, they're not going to be at 100% capacity. There are going to be some people who take a long, long time before they ever go back to movie theaters again, if at all, right? So let's say that takes off 5 or 10% capacity. So now they're only at 90% capacity. And then you have the problem of movies going straight to stream, right? They have movies of going straight to stream and straight to programs like Disney Plus. You have Raya and the Last Dragon going straight to Disney Plus. You have Soul going straight to Disney Plus. You have Trolls World Tour going straight to Disney Plus. You have Mulan going straight to Disney Plus. And then you have it on these other things as well. Obviously, Netflix has its own movies, and Amazon has its own movies, and HBO puts it on there. HBO, right? You're like the president. When the president opened his mouth, the market dropped. Don't, mister. Every time, see, it's what I said. Every time I'm on here, the market drops. How crazy. So, yeah, AMC needs straight to stream to make it absolutely Steel 211. They have to. The only way this company is saved, really, is if they partner with one of these straight to stream companies, right? So that's the problem. Part of the reason you went into movies is because they had distribution rights. They had distribution rights over companies like Time Warner Cable or Disney or whatever. They were the only ones who could show your movie first. Now, Disney's like, screw you, AMC, right? I'm just going to put my movie directly on Disney Plus. And I know some amount of people are going to watch it there. So then you lose another 5 to 10%. So max, very generously, capacity of where movie theaters are going to be at are probably about 80% of where it was pre-pandemic. And that's after everyone goes back in, gets used to it again, right? Maybe we're at 80% capacity. And if you were an unprofitable company, AMC, at before coronavirus pandemic, and now you are gated at probably 80% capacity of where you were before, you're toast, right? You're toast. Distribution problem solved with streaming, IBM Mark. Yes, exactly. Exactly. So that's the difficulty about investing in AMC. And it's not that like it makes me happy that movie theater companies are going to be really struggling, right? But the way they could potentially re-evolve is if they partner with some of these streaming companies and be like, this is where your go-to destination is. Or they partner with a Netflix or a Disney Plus, and they allow you to, I don't know, watch your Disney Plus and Netflix parties on the movie theater. And then you can rent out the movie theater and have an experience. It's about experiential viewing. AMC should partner with AMC. Yeah. So that's what they would have to do. That's what they would have to do to survive, right? Like, is Nokia still a thing? SBIS and me? No, Nokia is, I don't think it's getting pumped right now. Nokia, of course, the reason why people were pumping it was because of 5G technology in the future. I don't think people are going to be rewarded for 5G technology until everyone sees it on their cell phone and they're like, oh my gosh, 5G is here. Like, those type of big infrastructure plays where you have something like Nokia, it takes a lot longer to get there than you think it will. Like, they don't get rewarded, then all of a sudden, everyone has 5G, and then it matters. But until then, when they're building up all the infrastructure, they're not making a lot of money. And also they've lost a lot of the obvious meme energy. Nokia was the what? It was probably third or fourth or fifth on the late January meme page with GME, GameStop, AMC, BlackBerry, Nokia, and what? Bed Bath Beyond maybe were like the top 5 meme stocks. The memes are dying, unfortunately. Oh, don't know if AMC movie is different from AMC TV channel yet. They are different. They are different. But what shows does AMC even have anymore? The TV channel. I'm not sure they even have like what's the last big show they had? The Walking Dead? Like that ended several years ago? Like I don't know what's even on AMC anymore. Nokia is more long-term, waiting for that 5G before selling. Yeah, that's what you need. That's where you need to get there. Hi, take care, King Michael. Nice to see you, King Michael. So anyway, that's what we're going. Yeah, still last show they had was Walking Dead. Yeah, that was a long time ago. I don't know whatever shows they have now. Reruns of Breaking Bad is what AMC has. Walking Dead is still here. It's still going on. I thought it ended. I thought they had a season finale or like the show finale. I didn't know that. Oh, it's still on. Okay, well there you go. I'm wrong. Shows you how much I know about TV. I don't watch a lot of TV. But anyway, I think this is probably where I need to call it because it's 11:30 and I'm actually supposed to make some changes to one of our pitch decks tomorrow. So this is probably where I'm gonna have to call it for today, guys. I'm a little bit past my time, and I know it's because I started a little bit late. So I appreciate you guys sticking around. Thank you so much for coming in and listening to me. We've had a really good conversation today. I think we've made a couple new friends in here that haven't commented in the past, so I appreciate you guys coming in. If you want to catch me again tomorrow, I will be back here tomorrow, 9 to 11 Central Time, sometime within that time window, 9 to 11 Central Time, tomorrow being Wednesday, so you can catch me again then. And if you are just joining the chat, if you're just joining the stream, and you missed everything, I recorded this video and it's going to be uploaded to my YouTube channel, which is my link is in the bio in the description of my profile page. Love you, brother. Super White Satan, IBM Mark, thank you. Cutie Coot, thank you guys. Padgien, C, thank you. Fitaji Zero, smiley face, smiles to you. So if you guys if you missed the stream, you can go, if you're just joining especially, go check out my YouTube channel. I post these literally every single day as long as the video file doesn't corrupt, and in case you can't make it every day and you want to be part of the discussion and hear what I have to say. So I appreciate you all. Thank you so much for listening. Be safe, everyone. If you guys haven't been able to tell too, like I've been blinking this eye a lot. It's because like something is in my contact. It's been hurting. So I finally get to go take this out. So take it easy, everyone. Be safe. I will see you tomorrow.